How are the Carolinas right now? All right, hello everybody.
It was lovely. Carolinas are great right now. It's actually 57 degrees this morning when we woke up after the torrential rain that we had on the tail end of Ida. But it's nice. It's nice to be home, where I grew up in the Carolinas, and so it's been fun. Yeah.
Well, hello, everybody. I hope you're doing well. We're just getting kicked off here for the market recap. I hope you guys have some weekend plans. As a reminder, Monday is a market holiday. Yeah. I'm sure you already remembered that, though. So in any case, let's go ahead and read this legal disclaimer. I'll talk a little bit about my buddy Anne here, and then we'll get started. So today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Now, I do also want to say, as part of this, we're going to be, this is a little bit of a different event that we do. We do it almost every week. We try and do it every week anyway, but like we sit down and we talk a little bit about the stocks that we're interested in, things that we might think that or expect the market to do. We might talk about stocks that we own. We might, and I'll usually try and mention if I own it or not. But what I want you to understand is we don't know your risk tolerances to trading. We don't know. We're not. What I definitely don't want you to come away with is whatever stocks we actually happen to talk about, we're not making recommendations that you buy them. We don't know about your individual situation. And I'd always recommend that you only trade with money that you can afford to lose. And I'm sure Anne-Marie would agree with that sentiment as well.
Absolutely.
So, with that being said, Anne-Marie is our guest today. Anne-Marie has actually been a partner with us for years now. Actually, I think you're partners with us before I moved to California and back.
Yes. Yeah. Wait, you moved back to California?
No. I moved to California and then back to Utah.
Oh, okay. I didn't realize that you were in Utah first because I met you when you were in California. So, yeah.
You have one of our second most popular video ever on YouTube. It's probably close to 1 million views. And it was about the stochastic momentum indicator.
Yeah, still a very good indicator.
Anne-Marie is one of our favorite guests. I brought a pen and a notebook here because she usually has pretty good ideas, and I'll take some notes. But that's what I have to say about Anne-Marie. Anne-Marie, thanks for coming in today.
My pleasure. I'm looking forward to it. I really am.
The other thing I would recommend is for those of you that are in the audience, make sure to say hello. If you have stocks that you want to look at or you want us to kind of take a glance at, send them over. We'll make sure to look at them. And I thought we should start with maybe the Dow Industrial Averages today.
Yeah, great. So. Absolutely. With the jobs number, it was sort of a double-edged sword, right?
Mm-hmm.
Today we had a jobs number that was weak, which means that the Fed doesn't have a reason to really begin to taper, because Powell has said, listen, we want jobs, we want to have better employment. The unemployment rate ticked up just a little bit, and so that made everybody think, oh wow, maybe the recovery is not as strong as we thought it would be. And so it's sort of like a cross current of, are we still going to get free money from the Fed, or could things kind of slow down a little more than we think they're going to? And, I think that you can see how the Dow traded today. It sort of really told that same story.
Yeah, it seems tired to me too. Like if you just look at kind of the range it's been in for a bit.
Yeah, and it is rangy. Yeah, it is. It is.
So. In any case, though, is there anything in specific that you're looking for broad market-wise next week?
Well, market-wise, what I want to see is how well we hold support, because we are in a relentless bid environment, right? Any deep dips, they're bought. I mean, we haven't had 2 down days in a row in really quite some time. And so if we're looking at the S&P 500, It's
I could do
probably
that.
since May. And for the Dow, let's have a look-see.
Oh, I just changed the chart on you.
Oh, that's okay. No worries. I can't
Okay,
see
good.
them. So
Oh, okay.
I can't see them. So that there's, yeah, we have had, the last time we had a couple of down days in the Dow, it looks like maybe at the beginning of August sometime. We had a couple down days, and then,
Yeah,
right
right here.
away it got bought. Yeah. And so really, anytime we think it's going to roll over, we need to think twice and say, I'm just going to give it one more day to see if it fades. And if it doesn't, or it gives me a higher low, I'm going to wait and I'm not going to sell. I think a lot of people that buy puts or buy insurance in this kind of environment end up just, throwing good money away because we just haven't lost the bid. And that is so rangy right there. It is super rangy.
Mike says, it's good to see you again today. I saw you on IBD Live this morning.
Oh, fantastic.
I assume he's talking about you because I wasn't on IBD Live.
Oh, my goodness. I'm really glad. Wow, somebody caught me twice. Yeah. He'll notice that my hair was a lot neater this morning. Now it's a little crazy. Back to the trading day. So, yeah, my hands running through it and the like. Yeah, this market is really a space where we have to say, okay, how am I going to participate if I don't want to be in cash? And really, the simple answer is, why not look at the top 10 or 12 stocks that are not only the drivers in the SPX and potentially the YM or the NQ, but also sitting inside of so many ETFs that are pumping up their returns. The only way they can do it is by, adding Facebook or adding Amazon or adding Apple or something like that. If you go to like an ESG, pick an ESG. If you go to look at the contents of an ESG, you're going to see something like Apple or Facebook or something sitting in there, something that's totally not an ESG stock, but they're using it because many niche products that are specifically catered to one thing or another, they don't really perform as well as the broad market. And so there's no incentive to buy it. And so that is my thought. Don't do anything esoteric. Just go straight out vanilla. Apple's doing great. When I have a pullback, I'm going to buy a little Apple, right? So see how it's been in the sideways range, and then now it's breaking out. We're looking at this space and we're saying, this chart is looking like it's going to break out. If it pulls back to retest the area at 148, 150, I don't even think it'd come to the bottom of the pile, frankly, right? It's going to come, right there. 150 is that big round number. And we say, all right, I'll do it there. And, again, my favorite thing to do is sell a put in a market that's terminally upbid. You sell a put far out of the money. So you might sell a 140 for December, or even a 125 for December. Let me look at my option chains over here, and I'll tell you what those are looking like, or you can pick at them also. Let's look at the option center. I totally forgot we're running your charts. So let's take a look at Apple. And
we might have to look at yours. It looks like they might be doing some maintenance since the market
okay,
closed,
well,
and it's a
I don't
holiday
have
weekend.
it up there yet. Might be. So let me just pop on one of these other streams here and on my other laptop, and we will take a look at things like that. When the market is terminally not breaking support, like literally, let's look at a weekly chart of maybe the Dow, and let's see when was the last time we had 2 weeks down in a row.
I bet it was. I have a guess before we look at it. I bet it was 2020. I bet. I don't think it's.
Well, so
Here we
here's
go.
something super interesting. If we take a look at these weeks,
Oh, these
right?
are months. Let me go back down to week.
Yeah.
Sorry. Okay.
Right. So, you're right. It's October, November last year is the last time we had 2 weeks down in a row. And so we have to think to ourselves, I mean, when's the last time we actually saw something that looked like that? Right. And so when we're in this space, we have to think the obvious. Now, normally what we would do is we would look out over the horizon and we'd go, listen, this absolutely has to roll over. So I've got to take some defensive positioning. The defensive positioning really means buy the pullback and wait for that pullback to stabilize. So let's say it pulls back into something, and then the very next day or the very next week, it pops over and it holds old resistance as new support. That's what you're going to buy. But what does that really mean? That means we've got to sit on our hands. We might have to wait days. We might have to wait 4 or 5 days for a chart to come back into the area that gives us the least risk and the most reward. And that is super hard because we want to go in, look at the market, make a trade or get a position in and then sit back and wait. Sometimes we think, well, it might go back a little bit, but I'm not worried about it. And that's fine and dandy until it doesn't go back a little bit, but it goes back a lot. And then we start getting very nervous. But, just looking at something like that and saying, hey, I'm going to wait for the pullback. What does that pullback mean? It really is a dip into the last area of support you could see to the left. Right?
So if we're looking here, are you going to call that right here or maybe right here?
Well, that is the deeper support of the group. If we look at the last place that we had the sell zone trigger, the top of those candles, the sell zone right there, that is the new area of support, right? Because it's old resistance and we broke the high. And so coming into that region, we buy it, and our stop is fairly nearby that edge. It's near, maybe look at the wicks on, you see where the resistance candle is? See the low wick over to the right.
Oh, the one that's actually labeled resistance?
Yes, the one, the other right. The other right.
Oh, this one right here.
That one. Yeah, that right. Yeah. And so
I was in the military, and so you'd think I'd know the difference. I still have to look at my hands.
Yeah. Unfortunately, I actually do. That's a real thing for me sometimes. So 350 looks like about, the low of those wicks right there. It tells us, hey, if we lose that, we need to be a little cautionary about holding on to that position, right? We want it to come right back if it comes down below that edge. And really, we're in a part, here's something else. If we go to the daily, what we can see the candlesticks or the bars doing is really we retrace the prior day's range. In some form or fashion, we're always retracing the prior days. Even if we grind up, we'll gap down and break out, or we'll gap up and break down. We're in a constant retrace. And so we need to tell ourselves, listen, don't chase. Don't chase, no matter what it is, no matter how exciting it is, don't chase it. Just wait for the price to come to you. And then that way, you've been waiting the whole time for it to come to you. And your strategy is, I'm going to pick it up off the last area that everybody was buying. And that's going to be good enough for me. And if it runs without me, I'll wait until it creates a new area of frontline support. And I know that that's kind of boring, but it really does work. Even with the monster movers, like what moved today that also, they talked about it this morning, Broadcom, AVGO.
Yeah, let's look at it.
Yeah. And so Broadcom is fantastic. It broke out of this range here, and now it went up over 500 today, didn't it? Or maybe what kind of, yeah, we're looking at daily, maybe right near that edge, not quite, but see that area where you have your line? It is a great breakout zone. And so when a trade has been moving sideways, like this one has, and all of a sudden it breaks out, GAN, right? And we have a GAN tool over there. GAN says, hey, listen, let's look at these in the 50%, 25, 75% range. And let's see where the GAN box is. Okay. GAN fan. We could also use the Tyrone levels.
Okay, let's go ahead and find
where are they?
Tools.
You know what? That square grid.
Here's a GAN fan for you.
Yeah, that's the GAN fan. And the GAN grid.
Okay.
Yeah. Okay, so this, where do we want to put that edge?
Maybe here?
Yeah, perfect. Okay. Right? And so what that actually shows us is we have the trend line underneath that. That's what Jeff has done for us, pushing that up into the edge. It should hold that lane, but if it doesn't, it's going to drift right to the price point that his arrow is sitting at right now. And that's going to be around about the 485, 482.50 zone. Please forgive me for that frog in my throat. And I guess I'm killing us with the afternoon sun there. All right, that's a little bit better. Yeah, so right here looks like a great area to wait for a pullback if you're looking for Broadcom, because Broadcom is strong, but look at every time it's broken out above its resistance ledge, it just has given it back. And so even this breakout feels a little suspect to me in general, particularly as we come into that part of the year that is traditionally weak, right? September being traditionally weak.
All right. Can we take a look at this one? Costco.
Oh, yes.
Yeah, I do own this one a little bit. Let's go ahead and change over to it.
Great.
So that, of course, we bring you in so you can give me portfolio advice.
Costco looks really good. Here is the storyboard there, though. They just announced in the last briefing that they had that they are going to have a significant increase in the prices and overhead that relate to salaries, because they can't get much
that makes
help.
sense. Yeah.
And so that is going to be a little bit of a headwind for these guys. Now, it might not be a headwind for long. Let's say, and I am very dubious about this, but let's say that inflation is transitory and we end up looking at something that will come back, then Costco is going to do just fabulously. This big box is well positioned. They've got great contracts, and the only headwinds that they have are some of their suppliers have supply chain issues, but other than that, it's the salary event. Everything looks great with them. So they've just had this rounding, and now they're sitting up right at the old resistance area. So from this space that this chart is sitting in, we can see that potentially it looks like it could run another leg higher. But if I were a holder of Costco and I had several shares of Costco, I would sell a call way out of the money. And to do that, why would I want to do that? Well, there's a potential stall out that it could drop back to 450. So I might sell the November 490s, November 480s. And what that might do is give me some theta protection if our charts begin to go sideways, to revert to some kind of larger mean, right? So, maybe it's going to revert to, look at how steep this incline is, right? It's just a beast, truly. I mean, it's a beast. I remember looking at this when it just crossed 300, and I thought, there's no way. And look at the run. It's been incredible and a straight up shot. So the question then becomes, if you have this stock and you've got it and it's run up 35-40% since you got it, think reasonably and say, okay, in 1 year, is it reasonable that I hold a 40% gain in a long-term portfolio hold? And that answer is usually no. And so what we could do is begin to trade around the position so that the round numbers, 425, not that 425 is a round number, but we have quarters in our dollar system. So 425 ends up being a good number, and 400 is a good number. And so we start thinking about these areas that the chart could come into, but may never come into. And then we can also sell puts. Again, that takes some margin, portfolio margin. But if we look at a 400 and we go, hey, I'm going to sell the December 400s in Costco, that, let's see how that looks. Costco. And we look all the way in December. The 400 puts are going for $3.10 right now, right? So that's revenue stream, right? And so we're using the combination of knowing that we are in a terminal bid up to saying, hey, I'm going to sell something that it is so rare. I mean, the delta is 11. So when you have a delta of 11, for those folks who might not know, a delta of 11 means that it has an 11% chance of expiring in the money, or an 89% chance of expiring out of the money. So if Jeff were to potentially take this trade, he would have an 89% chance of capturing all of that premium that he sold to the dealer, who would be, of course, buying that put. So that's also great. And it's very conservative. I have some folks that go, yeah, $3 is not enough. I want to make 10, so I'm going to sell the 440. Well, that's great, except the price action could come to 440. And then, you got to decide whether you really want to have Costco stock or not. So those are a couple of ways that I like looking at this one. It's super strong, though. It's just bid up so much. So here is, I mentioned this morning. If, like we've talked about this, like the last time we were together, I said, how do we know the market's going to bump into trouble? Well, the first thing it's going to do is we're going to see overnight liquidity, or the repo window, the repurchasing window, the federal repurchasing window. We're going to see the Fed stepping in there to make up the gap between banks who are trying to loan to each other overnight. When they stop lending each other money, that's called a liquidity freeze. And we had that earlier in the year, and the Fed stepped in. It was like Marchy, something like that. The Fed stepped in. Yeah, the Fed stepped in and they said, all right, we'll stand in the gap. We'll stand in the gap. Now they have stayed in the gap and nobody's saying a word. So for me, I go, well, that's kind of weird. So at this juncture, I'm about 35% cash, because I don't feel good about being all in. And the higher it goes, the more profit I'm going to take. But I'm not going to go flat out bearish in any form or fashion until there's a liquidity squeeze that the Fed comes in, says, hey, listen, we'll take care of it. And it still doesn't fix the problem. The interest rates in the repo space start getting bigger. And when that happens, then I go, you know what? Time to tighten the belt, time to go buy a put, and those sorts of things. But as long as the wheels are greased, we're going to be all right. And any savage dip that we see, 1 day, 2 days, 3 days, we let it stabilize. If we want to chase the short, we absolutely can, but realize what's on the bottom waiting are people like me who are watching the sellers exhaust themselves and come into new groups of buyers that are saying, yeah, I'll do it. I'll buy that. And that literally is what's happening in every single pullback. And some of them are so shallow, we get so frustrated waiting for a pullback to trade that, it gets frustrating. But there are quite a few out there, and there are a few that are coming around the bend. I wanted to talk about today, I talked about a little last time, that are really going to start holding their edges. And I like, again, lithium, uranium, nickel. And so copper, I like copper, but copper's sort of one of those things, but I'm going to look for anything that makes batteries, anything that a battery has inside of it. And so for me, a lot of folks go, well, why don't you just buy the battery company, right? And my thought is, well, I don't know if that battery company is going to be able to keep their things to market and have their marketing edge and be the top of the heap. But I do know this, if I buy a collection of lithium miners, the person who's running that ETF is going to make sure, hopefully, if they're doing their job, they're going to make sure that it's balanced and they've got the best miners in there. And so there's Lithium Americas, that's LAC. There's LIT, so we can look at LAC, yeah, which it looks really pretty, right? Yeah, and it's breaking out. Yeah, notice, see how it was sideways, the middle of the chart, sideways, sideways, sideways. It breaks, but it comes right back in. This is the land, in my mind, of never buy the breakout unless you're planning on getting out in a hurry, right? If that's the case, you're going to be golden, but it pulls right back, and it pulls right back to the old resistance ledge that it's, yeah, right in there, and it starts popping up. And so for us, we can look at that and go, hey, if it's getting up over that ledge, my stop is going to be right there. So I'm going to continue. Now, what's happening now is it's in a little bit of a runaway because people are thinking to themselves, oh, it makes pretty good sense that is what's going to do. But anytime the market starts getting, I want to use the word rickety, but when it gets jumpy and it starts rolling over, they're going to run to their best performers. And because they've got to make margin or whatever, they're going to start selling them off. So the next nice place for lithium, to me, is somewhere around $18.50, $19, right? And let me see if they have, I think they have options, but I don't know. Yes, not very many, but hey, listen, calls 17,200, puts 9,900. So it's really quite a lot of calls to puts. And again, my favorite thing is, you go to the November and you go, hey, I'm going to sell the 15s, or I'm going to sell the 1750s. I can sell them for $1.15. I hope I get put to it, frankly. But if I get put to it, I really just paid only $16 for it. And this is a long-term hold. So when I sell the put, I'm thinking to myself, hey, if I get put to the stock, I'm going to be okay with that. And this is one that I'm going to be more than okay if I get put to it at that price. So I really, really like it. We are in an environment where the tail is wagging the dog. The options market is more robust than the stock market right now. And so all of these options being bought out of the money. Let's think about this, what this actually does. So I go and I buy, let's say I buy the 30 calls in lithium, and I buy them for November. Let's say I buy them for November. Well, if I buy those, there's somebody that's got to sell them to me, and that's the dealer. And when the dealer sells it to me, all of a sudden he's short Lithium Americas. And he doesn't want to be short Lithium Americas. He wants to be delta neutral. So guess what me buying all those calls makes him do? It makes him go buy the stock. He either has to buy the stock to shift his delta so it's neutral, or he has to sell a put. And if he sells a put, somebody else is going to be buying the put, and they're going to be short lithium, and so they want to balance their delta. They're going to have to go buy stock. And so if that is a little too complicated for folks, just remember that when you are long 100 shares of Lithium Americas, you have 100 delta, right? That is your delta. If I buy one option that is deep in the money, let's say I buy the November 7.5, the $7.50 delta, the $7.50 strike, my delta is almost 100. It's actually 99. But if I buy it, that means I'm buying it from somebody who had to sell it to me. And so although I'm bullish, they're bearish. And they don't want to be bearish, they want to be neutral. So they have to go buy the stock anyway. And that's why the options market is so important to watch, because they are telling the stock market, the options market is telling the stock market where to go. When years ago, when Jeff and I were wee tykes in the business, it was the other way around.
All right. Let's see. We have a request to look at Zion.
Oh, yes. Love that bank.
Okay.
Love that bank. Okay. So what is the storyboard here about Zion? If I look at it, I go, you know what? People have mixed feelings about this chart, right? Some of them feel up at the top, they want to sell it. Some of them feel at the bottom, they want to sell it. So, they want to buy it. And so my thought is it truly is range bound. And when a chart is range bound like this, your best bet is to wait for it on the bottom. Now, I remember, I want to kick myself sometimes because I totally remember Zion when it was like $8. And seeing it at 59, I just, wow, that's really fantastic. But I've always liked them. I think they're a very well-run mid-sized bank. They have a lot going for them. Right now, listen, if the jobs number is something that continues and we have smaller numbers than we're looking for, the Fed won't taper and the Fed won't raise rates. If rates get raised, banks have more squish room to make money. Because they aren't going to get squish room to make money because the Fed might not taper, the banks are going to have a rough go of it. So my thought is here, old resistance, we're coming into the same kind of resistance edges as we did back in June. We're sitting right on those same edges. Might not be a revisit to 52.50 or 53 might not be out of the question, right? So it holds, somewhere around that. It could be a very ugly head and shoulders pattern, inverted head and shoulders pattern, right around there. Eventually it's going to rise, but my suspicion is that this one is going to stay landlocked, just like most of the financial assets. If you're looking to acquire this one, I would say consider waiting for it to drop back into the 53.50 edge. If you're like, I don't want to wait, then you can do something like buying some stock and then selling a call right on top of it. So you're actually building a cushion into a pullback. So you have a covered call strategy that gives you a little bit of extra cushion in case it does fade and that doesn't feel so nice and cozy for you.
I have another one that we always look at, just for tradition. Disney. Let's take it. That
Oh,
one seems to be
yes.
kind of stuck in a.
It is stuck. You know, they're doing, I mean, a bang up job with building their online content. I don't know if you've seen Luca, or if you know, I got grandkids, and of course I like cartoons still because I'm 8 years old on the inside. I just look like this on the outside. But yeah, there's just some great, wonderful content, and so they're doing well. But the problem is, you know, how all of their amusement parks, I don't even know if they call them amusement parks, whatever they call them, I think they're feeling the pinch. You know, Disney World was fairly empty. I mean, there were a couple of days people said, yeah, it's really busy, but because I live in South Florida, I hear people talking about being there, and sometimes they go and there's like, yeah, there's nobody there. And so because of all the mask requirements, and many of the things are not there. Like you can't get your hair cut there. Apparently there's a big studio for you to have your hair done like a princess or whatever. And so all of those little extracurricular things that drive revenue inside of the parks are hurting. And I mean, this might be a little bit of trouble. On top of that, ESPN has been a money loser for I don't even know how many years. So, you know, it's I think they are in a little bit of a pickle right now.
I love Liquidity too. I made both my daughters watch it with me.
Isn't it fantastic? I can't even tell you how many times I have to say Silencio Bruno all the time. That's me. All the time. Silencio Bruno. So love that movie. So anyways, yeah. This sideways patch tells me better wait for a fade to get involved here. And the fade, remember, we've got a very big high on the left side of the chart and then a sideways motion on the right side. So if we think this is some possible kind of trend, that trend is down. And if we break the trend by time, means that it doesn't break resistance, doesn't break support, it has a tendency to drift back into the area of deep support, and that could be, you know, 160. So that's where I would sell some puts. Actually, that's where I have sold puts, right? Because I wouldn't mind hanging on to Disney over the long haul.
Mm-hmm. Well, we're getting into the fall. The summer's about over. It seems like Corona's happening. Are there any particular sectors that you think might have good opportunities going into this fall?
That's a really thoughtful question. So my suspicion is the following. One, I don't know that we're going to have another all-out lockdown. I don't think people are going to.
I don't think people will put up with it.
Yeah, I don't think they're going to deal with it. So that's the first thing. The second thing is, how much will the administration buckle to the eviction moratoriums, and where is the money going to come to help those landlords who really are up to their eyeballs in debt on their properties? So if you're looking for the proverbial shoe to drop, commercial real estate might be something that we would need to have a look at, I think. Also, large residential real estate, like American Homes for Rent. What is that? AHT, I believe. So something like that. Is that correct? No. No, that's not it. Okay. AMT? No, that's not it either. Let me look it up.
What was it called?
American Homes for Rent. American.
AMH.
AMA, of course. All right. So this thing has actually been doing really well because we know that affordable housing is something very, very difficult. A lot of young people can't make the down payments. And so this type of housing is on the rise. It just had a great breakout zone, and now it's sitting at old resistance, which to me tells me it's likely to come back in. Now, could it break out? Yes, but the question is, if they have the eviction notice that they put another moratorium on it, actually New York just did this so people can't leave, what is that going to, they're kicking a can down the street, and so potentially we're going to have a little wiggles right in there. And this is sort of the anchor of the American markets, right? How real estate holds itself together from a corporate and commercial side versus the residential side. And so these guys have been doing really, really well. If you look at real estate in the Russell or real estate in the S&P 500, it's been doing really well, like the rest of the broad market, until the last 8 weeks or so. And it's moved sideways, just like we see American homes for rent. So from a downside perspective, we might be able to see a little bit of shorting action in the real estate if we start seeing people not being able to renegotiate their loans. Because what happens is, if you've got this big building and people can't leave and you can't make the payment, you go to the bank. The bank says, yeah, I see what's happening. We're going to restructure your loan and kick the can down the street, and we'll split the difference with the interest, so on and so forth. So that's from a downside perspective. From an upside perspective, I think soft commodities are going to continue to rise. They've had a dip lately, and so things like corn, wheat, coffee, barley, orange juice, all of those soft commodities are going to rise for a number of reasons. One, labor, and they're going to have to pass it on to us. Two, diminished crops. Three, not even having the labor, even paying the labor, but not having the labor to go out and get it. And then if they don't have the labor, they're going to, what's it called when you have machines go do something? They're going to, whatever, right? They're going to have machines start doing more of the crop harvesting, and that's going to raise things. So
Automation.
my thought is, it's a Friday afternoon, and my brain turns to a bowl of cottage cheese.
Yeah. I had to think about it for a minute too.
Yeah,
so,
it's
a weekend. It's a holiday weekend too.
We got it. Yeah. I'm going to try and sleep. So, yeah, I think soft commodities. And then, the big thing I really like, but I don't see what's a really good way to play it, is cybersecurity. So I think all of the companies that are out there with cybersecurity, right? So we've got CrowdStrike, we've got CyberArk, there's one that starts with an F that's kind of a little baby one. But all of those things, we know that cybersecurity is important. The problem is these cybersecurity companies don't really have what we need to really stop something, because folks in IT in very big companies, the comment is always, listen, it's not have I been hacked, it's when will I figure out that I have been hacked, and how long would they have been in there before I figure out that we've been hacked. And so many of these things come in and they just sit and collect information until they decide to do one small thing. But by then, they figure out what to do, and then it might be late, it might be too late, it might not be too late. And so I like cybersecurity, but I'm not super happy with any of the companies that we have promoting that broad group. Maybe Kathy Woods will come out with something there, and she'll put us together on the right track.
Okay, we'll see. Well, I think that's all I've got. It's always good to have. So you're up in the mountains right now.
I'm in Charlotte, so we're at the foothill. We're in the the flatlands in the Queen City. So it's nice. It's nice. I wish I could get up to the mountains. I just can't leave my mom alone. Yeah.
Yeah. Well, have a great weekend. I appreciate you coming in.
You too. I'm so glad to be here. I hope everybody has a good weekend. I can't believe you did not ask me about RCL.
Oh, well, we got out of it.
You did?
Yeah. A lot. We've got her out of it quite some time ago. Well, at least I did. Greg had a position in there for a little bit longer, I think, than I did. RCL, but it probably went to 100. I haven't looked at it recently. I mean, it probably went up by 100% or something.
No, it's
okay.
Yeah, they're having a tough time. Listen, I love cruising, but it's always been a petri dish, and now it is. It's always been a petri dish, and so the recovery there. Look at how strong this thing was, right? I mean, it's just been so, and it's going to recover because they know what they're doing with their debt. It's not like they're super over leveraged. They just released a brand new ship. I don't know what it's called. Well, maybe about 8 months ago. It's some kind of ridiculous floating city. But I think once people that cruise get themselves vaccinated or get themselves over, remember, a coronavirus can last anywhere from 18 months to 3 years until it starts morphing back into a common cold, and then we'll have the next catastrophe on the horizon. But as far as this goes, just like SARS, and SARS had a much higher mortality rate than this current coronavirus. It's just much harder to catch. SARS was much harder to catch. This is much easier to catch, but eventually it's going to rotate out, and these guys are going to be in good shape. If they could base and come back into that 60-55 area, I'd say it's not a bad idea to pick up and collect a little bit of that.
I agree. I love cruising too. The chart was telling me to get out.
There you go. You gotta listen to the chart.
I had to stop. It was over.
Yeah.
So, in any case, all right. Thanks, Anne-Marie.
Okay. Thank you very much.
Thanks for everybody for coming too. I hope you have a good, safe holiday weekend. Stay safe. Stay healthy. We'll see you next time.